All right, in this video, we're going to practice the two horizontal methods that I've taught in the prior video. So the question at hand is prepare the horizontal analysis. So the selected data from the comparative statement of financial position of the specific company are shown below. So when we're talking about the comparative statement of financial position, we're talking about it from year to year. Remember, the financial position is another word for the balance sheet. So A is using horizontal analysis, calculate the percentage of a base year amount, assuming 2013 is the base year. Then B is using horizontal analysis, calculate the percentage change for each year. So what I want you guys to do right now is pause the video, attempt this question on your own, then resume it and mark yourself as you go. So for A, we're going to do it based off the base period amount. So since the base period amount is for 2013, so I'll do it for cash first. So for cash, we're going to take the 75,000 divided by the 75,000 to arrive at 100%. Then for 2014, we're going to do 175,000 divided by 75,000 to arrive at 233.3%. Then for 2015 for cash, I'm going to do 150,000 divided by 75,000 to arrive at 200%. Then for accounts receivable, I'm going to do the 450,000 divided by the 450,000 to arrive at 100%. Remember, the formula is going to be the analysis year divided by the base year. So for accounts receivable 2014, the analysis year is 400,000 divided by 450,000, the base year, which is 88.9%. Then for 2015, the analysis year is 600,000 divided by the base year, which is 450,000, is going to give us 133.3%. So for inventory, we do 700,000 divided by 700,000 to arrive at 100%. Then 600,000 divided by 700,000 to arrive at 85.7%. That's 780,000 divided by 700,000 to arrive at 114.4%. For property, plant, and equipment, I'm going to do 2850000 divided by 2850000 to arrive at 100%. Then I'm going to do 2.8 million divided by 2.85 million to arrive at 98.2%. Then I'm going to do 3.31 million divided by 2.85 million to arrive at 100%. Now for intangible assets. So we're not given any intangible assets for 2013. So it's just going to be 0 divided by 0, which in this case is going to be just 0 because we can't calculate that. So that being said, 100,000 divided by 0 is going to give us nothing, right? And then even for the 2015, 90,000 divided by 0 is going to give us nothing, 0. So technically, for intangible assets, we cannot calculate this because we had no intangible assets in the base year. So for this one, it's just going to be 0, 0, 0, or even just not available, not available, not available. Now for total assets, we can do 4.07 million divided by 4.07 million. Then we can do 4.07 million divided by 4.075 million. Then we could do 4.75 million divided by 4.075 million. So this is part A. Now for part B, which is the percentage change. We cannot do this for year 2013 because we don't have year 2012's information. So this is all going to be non-available. Now to do it for 2014. So this is a two-part formula. So the first part is we want to get the dollar change. So we're going to take the analysis year, 175,000, subtracted by 75,000, bracket, divided by the 75,000, which is 113%. So another way to look at this formula for the percentage change is going to be new minus old divided by old. This is another way that we could look at this. It's much easier to kind of memorize. So for example, if we're doing the percentage change from 2014 to 2015 for cash, the new value is a 2015, the old value is 2014. So let's just say, for example, for 2015, percentage change for cash, I'm going to take the new value, which is 150,000. Remember, I'm going to put that in brackets, minus 175,000, the old value, and divided by the old value, right? So plugging this in over here, 150,000 minus 175,000 divided by 175,000 gives me a percentage change of negative 14%. So another way we could kind of do this, so I'll show you for accounts receivable. So we're calculating it for 2014, the percentage change for 2013 to 2014. You could do it in a different way where you first take the first part of the formula, the 400,000, minus it by the 450,000, which gives us negative 50,000. Then you take the negative 50,000 and you divide it by the old value, which is 450,000. So this over here is 0.11 negative. Then I'm going to take this and I'm going to multiply this by 100 to arrive at 11.11%. So 400,000 minus 450,000 divided by 450,000 is a negative 11%. Then I'm going to do 600,000 minus 400,000 divided by 400,000, which is 50%. And you just run the same formula all the way across. So I'm just going to input the numbers in right away, right? As you can see, for intangible assets, this formula cannot run because this is essentially 0, right? So Excel won't let you do that, correct? So 100,000 minus 0 divided by 0 is just going to be, so this is going to be non-available as well. Okay, now let's actually analyze this information now. So for A, as you can see, cash has overall been increasing. Like in 2015, it was 200% of the value in 2013. So now let's actually look at the horizontal analysis and the percentage increase. So we're saying cash increased from 2013 to 2014 by 133%, which is obviously great. However, from 2014 to 2015, it actually decreased by 40%. So that's red flags there. So even though cash in 2015 is still 200% of the cash from 2013, we now have a red flag. Why did cash decrease? So now looking at accounts receivable actually decreased by 11%, but in 2015 actually increased by 50%. Now we can kind of paint a picture now. So we're like, you know what? Accounts receivable decreased, meaning less accounts receivables outstanding, meaning potentially we're earning cash at a faster rate from our customers now. So our customers are paying us, that's why cash is up. However, now in 2015, our AR has increased, meaning we have more accounts receivables outstanding. And as a result, we have less cash on hand because the customers are not paying us. So this is how we're kind of analyzing the financial statements. Because remember, this is from the statement of financial position, correct? Just the assets portion of it. So cash, accounts receivable, inventory, these are current assets. Then we have property, plant, and equipment, and intangible assets. So we're not kind of painting a picture, figuring out what's going on within our actual company. Now, inventory decreased in 2014 compared to 2013. So this could be good or bad. This could be good because we're actually selling off for inventory, which is what every company wants to do. It could be bad because we might be, our total sales might have decreased, so we have less inventory on hand. So we kind of have to paint the entire picture, right? Kind of figure out what's going on. So I'm going to go straight over to total assets. Actually, you know what? Let's talk about property, plant, and equipment. Property, plant, and equipment decreased by 2%, which isn't a significant amount. So that, even though it decreased, that shouldn't raise any red flags. But the fact that it increased by 12%, that's actually excellent because that means either our value of our property, plant, equipment that we have currently is increasing, or we went out and we bought more property, plant, and equipment. So we're investing in the future growth of our business, and maybe that's why cash decreased, because we're spending our money on buying for the future growth of our business. Whereas intangible assets decrease, so that could be either we sold off intangible assets or our value of our patches decreased, because patches become impaired over time. So this is how we kind of analyze the financial statements using horizontal analysis.